Hey traders, this is Blake Morrow with Traders Summit, and I have Dirk Friczewsky with Friczewsky Financial Markets sitting down today, talking markets, talking euro, talking a lot of volatility, right? Good to see you again.
Thanks, Blake. Thanks for having me on again.
Yeah, before we started, we were discussing your travels here in the United States. How did you feel about being in the U.S. again after? I'm assuming you haven't been here since pre-COVID.
That's right, especially kind of a price shock, of course. We already spoke about that, about prices rocketing, skyrocketing, especially when it comes to hotels and everyday drinking places, whatever. I mean, it's a hard game. I mean, mostly people can afford that when they are traveling to the US, but I'm not sure about the average Joe on the street. I mean, it's kind of a pain, all right?
Yeah, it is definitely expensive, and especially coming from Europe. I mean, we were talking about the post-COVID charge anything. Everybody wants to travel. Wonder how long that's going to sustain. Hopefully, not too long for all consumers globally. Let's just pray, right?
I hope so.
Well, go ahead.
Well, actually, if you just check out the price leverage from the last 12 months, I mean, you see that CPI core data from the US. We see that from the Eurozone here. I mean, we are almost getting to the same level and yeah, moving around that 8% marker. I mean, it's insane, of course, but a lot of stuff is going on with energy. And especially here in the Eurozone, we got a lot of trouble with all these kind of energy prices, especially when it comes to that Russia-Ukraine story, and especially when it comes to, let's say, the LNG or the gas, whatever, oil, heating oil, all that stuff together. It's crazy. I mean, something like 35% of the whole consumer price index is built up by that kind of price leverage.
Well, let's talk about this a little bit, because last time you and I met, you were more constructive on the euro. You thought the euro might see 1.11, but obviously 2 months have passed. A lot of things can change as traders and as people like yourself and myself trying to navigate through the markets. Getting a barometer where you feel 2 months ago is not the same as, it can change from day to day. So I want to get your views on the euro, but before we kind of look at the euro, let's talk a little bit about it, because you mentioned that the Eurozone inflationary pressures are about the same as the US, or they're getting up there. But why hasn't the euro performed as well as the dollar, and why is the euro still under pressure? What disconnect do we have between two central banks? Can you talk a little bit about the ECB and why maybe they're not as aggressive as the Fed or as hawkish? What are your thoughts there?
Yeah, well, first of all, it's all about the rate differentials, and if you check out the Federal Reserve, of course, is more aggressive and pumping up that kind of a pace, and they got something we don't do yet. They are doing something like, it's called QT, so the quantitative tightening. I mean, it's not the big kind of reinventing the wheel, but it's something like 47.5 billion a month from the beginning of June. And the first 3 months they will do that. So it's not a big number, but if you just check out what they are doing the next 12 months, if they really do so, so they're probably reducing the balance sheet size of about 1.1 trillion US dollars. And the ECB so far is just hiking in July, something like the first little step, 25 basis points. Whatever they tell about the foreseeable future or until the rest of the year, it's not really a big game for them. And we got a couple of new things coming up besides all this sad Ukraine-Russia story. It's Italy again. I mean, the country is highly indebted with 150% debt to GDP ratio, so that's crazy high. And if you just check out, you can do that yourself out there. Just check out the bond levels, so the yields. Just compare them. For example, the German 10-year bond yields around 175 right now. I'm speaking, and the Italians are around 4.3% already. So wow, that's a huge spread already. And if you look back in all this kind of euro crisis trouble, they just pushed it by in direction above 7%. And so everybody is scratching his head what the ECB is going to do to face this kind of issue. And because they want to end all the stuff, and end to asset purchase stuff and everything like that, and how they're going to do that, how they're going to manage that. So that's crazy.
It is crazy. And this is the kind of thing that, as a market participant and an outsider looking into the Eurozone, the differences that we have here in the US is we have a fiscal union where, if you took the state of California, could be like the equivalent of Germany, where the state of Arizona, where I happen to live, could be like Italy. And, they require two different monetary policies if you don't have a fiscal union. We have one, but the European Union is still, fractionated, I guess would be the word. I'm not the word I'm looking for, but it makes it more difficult for the ECB to act as a whole all the way around. So what are your thoughts here, what the ECB will be doing moving forward? And will there ever be a point where, the euro will see parity because the Fed continues to hike rates and everybody looks at the Fed and they think they're hawkish, but the ECB is just not going to be able to play catch up? Or do you think that you'll see that the two central banks their policy more converge rather than continue to diverge? What are your thoughts there?
Now, maybe they will try to manage to try to avoid that kind of parity move for some reason, because they are doing a lot of business together and maybe they don't want to crash the system. First of all, in the longer run, of course, let me just explain what is going on with the Eurozone right now. I mean, we have 19 members. So the Eurozone consists of 19 members, and they are already speaking about the 20th member. It's Croatia, which could come into that union next year, beginning January. So it's crazy. another country coming in, and maybe not the stablest one. However, that they try to manage to do that. And in the longer run, they are already speaking about countries like Bulgaria. Look at euro notes. You will find that there are 3 different ways of writing the word euro. You got one, it's the usual euro. Then you got another one, that's the Greek version, euro. And then you got the Kirill letters. So that's already prepared for Bulgaria. Imagine that. So a lot of stuff coming up, and I don't see how they really push it up into the territories I spoke 2 months ago, into 110 or 112. A lot of stuff should happen. And regarding the problem with Italy, they could probably do something nobody wants to do, to create special tenders, to create special operations for a couple of countries. And in the end of the day, some lawyers, whatever, will face the ECB with new problems because they are directly financing a state with the help of doing that.
Wow. Well, there's a lot to think about when it comes to the euro. And I'm going to ask the participants from the viewers, if you're at home and you're listening to Dirk, first and foremost, give him a thumbs up if you're watching him on YouTube. Make sure you jump in the comments below. If you have any opinions regarding the Eurozone and about future actions of the ECB, I'd love, and I know Dirk would love to read your comments and hear about them as well. But Dirk, let's shift gears and look technically at the euro and what you're seeing, because obviously we're coming back down to we were just recently down below 104. Testing some pretty key lows. So how are you viewing the euro right now?
Well, I start sharing that screen here. Maybe you can see it already. So you will face the typical Fibonacci analysis I use a lot. The starting point was that low we already had here at the middle of May at 103.49. If you just check out, or let's see what it is, the low is at 103.53.5, and coming up to this level in direction to the last high here at 107.87. So I did the combination of these two levels, and the platform gives you that kind of retracement levels. And of course, if you just squeeze that kind of picture, give a couple of projections to the downside as well. And you can see, if you just check out a projection level at 161.8 projection level, we are already very, very close to that kind of parity. So that's not a big jump down here. I mean, if you just check that in numbers, it's not very far away, especially when you just check out these last 3 days after the ECB somehow disappointed, because some kind of market participants, they already thought maybe the ECB will step in June already, hiking 25 basis points and explaining more and delivering more into the next month ahead. But they did not do that. They kept the strict panel they published before. So this is the way the market was reacting about that and giving the ECB a so-called red card, I guess. And if you just check out the current levels, of course, we have a chat about that between market participants, between us traders all the time. What is the Fed doing? What is the Fed doing until the end of the year? Could they really do so as they pretend to do? Last time I spoke about this typical wording, talk the talk and walk the walk. Is it really possible that the Fed will be ending up in direction 3%? If they do so, well, in that case, I would say yes, parity, welcome. That's the point.
Okay.
If they slow down, they will probably end up something like 105 again. So
we talked before we started recording this interview, and just so all of our viewers know, tomorrow is the FOMC rate decision. By the time you see this particular video, you're going to be watching after the Fed. And I told Dirk that I didn't want to put your feet to the fire and kind of discuss what you think is going to happen for the FOMC, because obviously the Fed can surprise the markets, and they've been known to, even though they're pretty good about delivering pretty solid expectations and kind of getting the market prepared for what they're ready to do. But we've seen talk over the last couple of days really about the Fed potentially raising rates 75 basis points and maybe even a full percentage point. Do you have any thoughts on if the Fed would do that, and what would happen to the markets just in general if the Fed was to be so aggressive? Do you think that the market would take that as a positive, that the Fed is trying to get ahead of the curve? Or do you think that the market's going to say, oh my gosh, further tightening conditions, you're going to see stocks, come down, the dollar continue to rally? Do you have any thoughts? And like I said, everybody, all of our viewers should give Dirk a little bit of leeway that we react during the FOMC, not so much try to predict exactly what's going to happen, but I'd love to hear your views.
Yeah, well, it's just a feeling about, just imagine the Fed is about to hike what they told us before, 50 basis points. That would be something like a market relief, I guess. So that would be a long scenario for the US stock markets. In case they really deliver something like 75 to 1%, so 100 basis points, this is something like everybody is thinking about the Fed is in a panic mode, in a panic button to hike all the time, just to run after and to get to that kind of a neutral interest point of interest somewhere between 3 and 3.5%. In a very fast pace. So I think in that case, this is almost getting the market to a little bit more sell-off than we saw that before. So I read something about a so-called Fed put area. If that really happens, we will be seeing something like the SPX in direction 3,500, probably something around that.
Yeah,
and, we are not far away actually, but it's still more than 200 points still away, right?
Yeah, we're only about 250 points away from 3,500, which would complete a lot of technical targets for many traders that I know around the markets. But it's going to be a pretty interesting market as we go through navigating through the FOMC over the course of the next couple of days. However, going back to the ECB and going back to the euro, do you feel, and we'll wrap it up with this, do you feel that the ECB has the ability to become more hawkish, or do they have to just kind of go at this, this very slow, methodical pace despite higher inflationary pressures, because they don't want to put any other pressures on some of the European periphery? How do you feel about the euro moving forward, or the ECB moving forward? Excuse me.
Well, somehow they need to do something, of course, especially for the northern countries and the stronger economies like the Netherlands, Germany, and even France, whatever. Somehow they need to do something because they have to combat that kind of high inflation rates. It's not useful to do that, to let it run all the time. And especially when it comes to energy, all this kind of energy you are importing into the Eurozone. Of course, you are paying that mostly with dollars. And the more you face a problem of a weak currency like the euro, compare that directly to the US dollar, you're importing inflation even more. So you're importing more of the problem. So somehow you need to do something.
Well, let's see if the ECB is capable of doing something in the coming months. But I want to say, Dirk, it's a pleasure to catch up with you first and foremost. I'm glad you made it back from the United States safely, minus all the money in your pocketbook. But glad you made it home safe. I want to ask if this is the first time I'm learning about you. How do I follow you and your work?
Well, so first of all, like you see the YouTube channel, if you just type in my name, Dirk Friczewsky, or if you just check out Google via FX Dirk, very easy to find. The Twitter handle, same Twitter, same shortening. You will find a couple of informations about me, especially when it comes to my website. Of course, that one is in German, but you will find a couple of informations there as well. www.germantrading.de, so very easy to find. And there are a couple of buttons for YouTube channel and LinkedIn and stuff like that to connect.
Awesome. Well, Dirk, I'm going to mention to everybody listening in right now, Dirk and I have followed each other on social media for well over 10 years. He's one of the very first people actually that I came into contact with on Twitter nearly 15 years ago. And you've been a pleasure to know. And I'm so glad that you and I get an opportunity to speak one-on-one, because I think you're a wealth of knowledge, and I appreciate you. And I know that the Trader Summit community appreciates having your knowledge here. So thank you so much for joining us today.
Thank you very much, Blake, again for having me on, and have a good one. And hopefully we'll see us next time as well.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.